Imagine a cryptocurrency that's quietly partnering with giants like Google, IBM, and now energy powerhouse Repsol, building a foundation for trillions in real-world assets. And on the verge of regulatory clarity that could send its price soaring, that's HBAR. And today, we're uncovering why it might be your next big opportunity before the masses catch on. Welcome to Generational Wealth, your pathway from knowledge to legacy. Today, in this calm deep dive, we'll explore HBAR, the native token of the Hedera network, reviewing the freshest news from the past 90 days, its current price dynamics, and expert forecasts to determine if it's truly poised for an explosive breakout. Let's get into it with a quick overview of what makes Hedera stand out. Hedera Hashgraph isn't your average blockchain. It uses an innovative gossip protocol for ultra-fast transactions, handling up to 10,000 per second with minimal fees and a carbon-negative footprint. Governed by a council featuring heavyweights like Google, IBM, and Repsol, it's designed for enterprise-level applications. From tokenizing assets and NFTs to DeFi and beyond, essentially, Hedera positions itself as the reliable, scalable alternative to networks like Ethereum or Solana, focusing on real-world utility. Diving into the recent developments over the last 90 days, Hedera has been stacking impressive milestones, even in a volatile market. Back in late October, HBAR bounced back from lows around 10 cents, pushing up to 21 cents in a strong retracement. By November, the Hashgraph group introduced EcoGuard, a powerful tool to revolutionize the global carbon market, leveraging Hedera's technology. Key partnerships emerged too, with Repsol joining the Hedera Council to advance Web3 and digital identity initiatives, alongside the Global Blockchain Business Council as their inaugural strategic ally. Moving into December, the mainnet received an upgrade to version 0.68, enhancing smart contract efficiency and node performance. Notable adoptions included BlackRock's money market funds being tokenized on-chain through Arcax, and enterprises like Red Swan shifting billions in real estate assets to Hedera for real-world asset tokenization. Additionally, payments behemoth Stripe, valued at $70 billion, selected Hedera to combat the $85 billion ticketing fraud issue. As we hit January 2026, a draft U.S. Senate bill proposes classifying HBAR as a network token under CFTC oversight, akin to Bitcoin's commodity status, which could significantly reduce regulatory hurdles for exchanges and ETFs. On the flip side, Hedera announced an 800% fee increase for 2026, potentially affecting smaller users. While demand for HBAR ETFs has tempered, making prices somewhat susceptible. An upcoming mainnet upgrade to version 0.69 is slated for January 21st, further optimizing for enterprise scalability. Across X, there's growing excitement, with discussions highlighting over 50 enterprise use cases primed for launch, and some voices predicting a breakout year. These advancements underscore Hedera's push toward widespread adoption, establishing it as the trust layer for the evolving digital economy, from real-world assets to regulatory progress. That said, the price story has been a bit of a ride. As of January 14, 2026, HBAR is hovering between 12 and 13 cents, down 3.5% over the past week and lagging behind the broader market's 3.8% rise. It's dropped 28% in the last 30 days, remaining 77% below its 2021 all-time high of 56 cents. Trading volume has spiked to $395 million at times, solid rebounds from 10-cent support levels. Technical analysts are noting bullish patterns like flags and potential reversals, with resistance around 13.5 to 14 cents and upside targets at 16 cents, 22 cents, or even 30 to 40 cents if momentum builds. Conversely, a drop below 10 cents might push it towards 7 to 9.8 cents. Community sentiment is varied. Some on Reddit label it as one of the underperforming top 100 coins recently, while X is abuzz with predictions of breakouts to $1.50 or higher. Looking ahead to 2026 forecasts, opinions vary but lean optimistic. Changelly anticipates an average of 18 cents, peaking at 20 cents. CoinCodex projects higher, up to 29 cents with a 20-cent average, suggesting a potential 134% return on investment. Buying crypto sees 13 to 16 cents by late January. Venture Burn estimates 28 cents by year's end. More conservatively, Kraken forecasts 12 cents, and Finst's neutral scenario hovers around 8 cents. On the bolder side, Binance Square predicts highs of 35 cents, with some YouTubers eyeing $1 to $2 or even $15 long-term as enterprises ramp up. Godex goes even further, suggesting up to $1.57. Catalysts for a potential surge include regulatory victories unlocking ETFs and institutional inflows. Alongside the booming real-world assets sector like real estate and carbon credits, where Hedera's enterprise edge could channel trillions on-chain, its correlation with Bitcoin and favorable altcoin seasonality, especially January's historical strength for HBAR, add to the upside. However, challenges persist. The fee hikes could discourage retail participation, ETF interest is waning, and on-chain metrics show 90% of buyers have sold off lately. Supply inflation and market-wide corrections remain threats. And despite solid progress, low volume and slipping market dominance have frustrated some in the community, as seen on Reddit. In summary, HBAR boasts cutting-edge tech, strategic partnerships, and promising regulatory momentum that could fuel a significant run in 2026, potentially delivering 100 to 200% gains if the bulls prevail. Yet remember, it's not a quick pump like meme coins. Volatility is inherent. Share your thoughts on HBAR's potential in the comments below. If this analysis resonated, give it a like and subscribe for more insights. We do a crypto news video every morning and a deep dive every afternoon. Let us know in the comments any subjects you'd like us to cover. Thanks for joining. Until next time. Quick disclaimer, I'm not a licensed financial advisor. This is for educational purposes only and not financial or investment advice. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.